Hey there, it's Dean Odell with 7 Gables Real Estate in the Odell Group. Today is March 25th. It's time for the Orange County edition of Tustin Talks. We're going to tell you what's going on. So let's get started with the charts. I'm going to give you a quick summary and then we'll talk about each chart. So this first chart is a comparison of 2013 with 2021, and it compares interest rates and inventory levels. The second chart is active listing inventory year over year. The third chart is demand year over year as compared to the previous 30 days. The next chart is demand by price point. And the last chart will be expected marketing time. Okay, starting with the special chart here that we have of 2013 versus 2021. The reason for this chart is because we have not had inventory levels this low since January of 2013. And interest rates were also at historical lows for that time in January 2013. So what this is this is a comparison chart, because what we want to talk about is the effect that interest rates are going to have this year on demand and on the housing market. So history tends to repeat itself. You can look at this chart here. The top line, the green one that's dotted, is how interest rates moved over that year. The solid green line is the inventory levels. And you can see that we peaked in inventory in October, November that year, which is odd. And the reason that's odd is because we usually peak in July through September for available listings. But because interest rates were climbing, it had a lagging effect and we had high inventory levels. So now we go back to this year, which is 2021, the red line, and you can see we're kind of having the same phenomenon here. Our interest rates have moved up from 2.65% to about 3.25% now. And to cool off this market, they may have to get as high as 4% by the end of the year. And if you look at the inventory level, the red line, you can see that it's very similar to what was going on in 2013. So with interest rates rising, we're expecting inventory levels to come up for the regular spring market and maybe a late peak again in inventory this year. So all right, let's get to our regular charts. Okay, so if we look at Orange County listing inventory, you can see that same red line there, 2,349 homes in the whole entire county. You can see how that compares to previous years. It's extraordinarily low. Last year, we were at 4,159 homes on the market, so we had 77% more homes to sell last year than we do right now. So this is a very tight market. And this is why we almost need interest rates to climb, because interest rates climbing will slow down buyer demand. It will fuel the sellers who have been sitting on the fence waiting to put their houses on the market to do something, because once they sense a change in the market, a lot of these sellers will come to market. Hey, sorry to interrupt this program, but we want to make sure you are subscribed to Tustin Talk. So please click on the subscribe button below. And then if that doesn't work, just go to theodellgroup.com, or you can go to youtube.com/Tustin Talks. Now let's get you back to the program. Okay, our next chart is demand. And this is a snapshot of previous years for the last 30 days. And you can see that the red line again, look how high demand is. It's very high, highest it's been in 4 years, 3,110 homes that went into escrow. And last year there were only 2,398, which was 23% less. But now realize that the big C had just started to kick in here. So we really need to look at what is the average 5-year demand. Throwing out 2020, there's normally about 2,565 homes that are in escrow on average, so we are at 18% less. Last year was a little bit less because of obvious reasons. Okay, looking at demand by price point. So here's what we have. Look at the expected marketing time. Now, if you guys recall, anything under 60 days is considered a hot seller's market. So we are under 60 days all the way up to $4 million. It's just unbelievable. how hot the market is. And you can see the little speed indicator there. The market is pegged all the way through. The only market that is somewhat normal is the over $4 million market, which has been a buyer's market for a long time, but even the over $4 million market now is at equilibrium at 116 days. Means it's neither a buyer or a seller's market, it's a balanced market. And you can see how the share of housing inventory compares with the demand there and where we were on expected marketing time last year. Now this last chart, it shows the average of the expected marketing time, and you can see the red line. We are down to 23 days. Now we expect that to rise. We think that's going to be the low because typically in the spring and summer, a lot of sellers are going to overprice their homes. Interest rates are rising, which should have an effect in terms of multiple offers and slowing down the market as well. But as you can see, at 23 days, we are in a hot seller's market. It has to get past 60 to just get into a slight seller's market. It's gonna have to get past 90 to get to a balanced market. So we got a long way to go, you guys, until it's a balanced market, and even longer until it's a buyer's market. So now we'll talk a little bit about my buyer and seller advice, all right? Okay, so the market, well, you can see with 77% less inventory and more homes selling, 3,100 homes roughly versus 2,300 on the market, every month we're just dipping into that inventory. It's gonna take a long time to get this thing back up to a balanced market. There is a shift occurring, but it's a slight shift, and it's gonna take a long time, probably at least a year or two, before we get to a balanced market the way things are going, unless interest rates just really climb quickly. So we're gonna have to see how that all plays out. We showed you the charts on what happens when that happens. That said, my advice to the buyers, you know interest rates are gonna climb on you. Every time they climb by 0.5%, it costs you roughly 5% in purchasing price or purchasing power. So you can see rates have already gone from 2.65 up to 3.25, so you've probably lost 6-7% purchasing power with a normal 20% down payment. So that, coupled with the fact that supply is low, demand is high, this is also driving prices, so the market is definitely getting heated, and I know you guys can feel that, but just know that hopefully there's some relief around the corner as more inventory hits the market, and sellers a lot of times will tend to overprice in a spring-summer market, and maybe some of these houses will start sitting around for a while. So just hang in there and keep trying. And sellers, here's my advice for you. Yes, you're in control of the market. Things are great, strongest market ever. Like I said, it's gonna take a long time to turn, but I would just forewarn you that with the rates rising and the numbers that I just quoted to the buyers, how that affects your purchasing power, that along with more competition and inventory coming to the market is going to cool down the market. So like I said before, it's got a while before it's going to cool off. Still a great time to sell a house. I don't know, really how, our team has done it, quite honestly. The inventory is down 77% and we're still selling homes. Anyway, with all the dynamics changing in the market, it's really important to have an agent that's, knee deep into the market all the time. And with us and our team, we always have buys going on, sells going on. We always have offers coming in. I mean, we're just dealing every single day in real estate. It's not something we just do every once in a while. So this is the time you want someone who's totally engaged, who totally understands when little changes are happening in the market, so they can give you the best advice. Anyway, if we can help you out, give us a call. We're prepping homes right now for April and May, and we hope to hear from you guys soon. Thanks for watching. Bye. Hey, don't forget the Odell Group is one of the top 10 teams in Orange County. We have sold thousands of homes. So draw from our experience and let us help you out. Subscribe right now and watch our videos to educate yourself, whether you're a buyer, seller, or both. And then visit our website at theodellgroup.com and reach out. And let's get to know each other so we can help you. All right? Thanks. Bye-bye.